Hey guys, and welcome to the Working Money channel. So I don't know how many of you guys in the United States specifically received this notice: uphold, suspend staking programs in the US following the SEC notice, funds to be unstaked by April the 27th. So guys, it looks like it is a war on staking. The SEC has come down on Coinbase, and Coinbase has done something similar. This was the notice sent to Cryptic Poet, and I'm sure if you guys live in the United States and you are also with Uphold, you probably got something similar. We're sorry to tell you that we've decided to suspend our staking program in the US until there is greater legal and regulatory clarity. I mean, this is what we've been waiting for years now. Well, we've not been contacted by the SEC about our program. As a regulated institution, we can't ignore the recent SEC guidance on staking. We'll shortly begin the process of unstaking customer assets in the United States and expect funds to become accessible between now and April 27th, 2023, subject to each underlying blockchain unbounding period. Final rewards will be paid out on Thursday, March the 30th, 2023. Rewards will not be earned during the unbounding period in line with the, and then it gets cut off down here, but I think you guys get the point. So staking has always kind of been this quasi gray area in the crypto space. Obviously the legacy banking sector, not a fan. And so what is the SEC doing? They're coming down on cryptocurrency exchanges. One of the most recent ones, Coinbase, and now Uphold, doing this as a precaution. So wanted to thank Cryptic Poet here for posting that. Guys, I keep saying, and I mean, we just don't know. I mean, we're getting attacked by so many different angles here. With regards to crypto clarity, the SEC, the US government, trying to clamp down. Whether it is an exchange collapse or an exchange shutting down or, halting, one of their programs like staking or delisting a coin. This is why I always say keep your cryptocurrency safe somewhere where you know you can have access to it whenever you want. And then from there, you have to find another option, maybe another exchange, maybe use a VPN, I don't know. But always, always, always keep your cryptocurrency safe on something like a Ledger Nano or something similar. I do have an affiliate link in the description of every video I do. You can use my link if you want. You don't have to use it. But I urge you guys, because this is hitting a fever pitch. We also got news, guys, breaking news. Do Kwon has now been arrested by Korean officials. It's brought to us by XRP Crypto Wolf here on Twitter. It is confirmed he was the central figure and co-founder of the Terra Luna project in the Terra Luna coin scandal. Prior to that, Philip Adizik, Montenegro's interior minister, tweeted that a person believed to be Do Kwon was arrested in Montenegro. The police were working to verify his identity through fingerprint analysis, but now this is confirmed, guys. Do Kwon has been arrested. He was accused of violating South Korea's financial laws following the collapse of Terra USD stablecoin and Luna coin, or the Luna token, that sent shockwaves across the crypto industry last May. So it has been a year of this guy on the run, finally now going to face justice. So I thought I'd just bring that update to you guys as well. We've got XRP here on the daily, and guys, although we were expecting, we were hoping for higher highs for XRP. Right now it's sitting at about 43 cents, but the chart still looking fairly good. Let me zoom in first, and then we're just going to take a look at XRP on the hourly. As I was talking about yesterday, we did see this double bounce. We did see a move back up here and a slow slide back down. However, in the shorter term, we are making higher lows. So that is positive. Hopefully we can get above this level here, which would be about 45.5 cents. Something I noticed, something I found very, very interesting with this. Let me get rid of some of this just so I can show you what I noticed here. This volume bar, okay? Very, very tall volume. If I scroll over that, you guys can see 11.45 million in XRP traded. And you guys can see the corresponding candlestick with that is not really that big compared to the ones beside it. So that's 11.5 million. If I just scroll over, that's only 2.25. And if I scroll over the other way, that's only 384,000. So the volume bars you guys can see beside that one, not that big. But the price range of XRP was not that large either. When you compare that to what we saw during the rally up here, you can see the volume bar here, not nearly as large as this one over here. And yet take a look at the price. Take a look at this candlestick in comparison. So what this tells me is that even though we were seeing a lot of selling pressure, okay, right over here yesterday on Thursday, March the 23rd, the volume of XRP is actually moving, but the price is not actually fluctuating as much, which means there are the buyers still to support that demand, which means this was catching buyers off guard. There wasn't enough buyers to meet demand, which brought the price up. But guys, here, a little indicator, we're seeing a lot of buying pressure, which I think translates to more FOMO in the market. So to me, this is a good sign. Lots of investors are still buying up XRP. If I throw this on the daily, you guys can see the daily chart here. Get rid of that, and the candlesticks here on the daily forming what is looking like to be, hopefully, the beginning of what I'm assuming will be this. We don't know, though, for sure. It still has to play out, and this could play out until, mid-April, give or take, before we see another move to the upside. So that is just some speculation on my part. If I throw it on the 4-hour, you guys can see the 4-hour is looking a little more formed here. So, in terms of a 4-hour chart, hopefully we start to see that pattern formulate. Let me just bring up Bitcoin real quickly here. Bitcoin trading at $28,000. Let me throw that on the daily. And we've seen another push up for Bitcoin. So Bitcoin, working its way up. We really do have to get above this level, though. Really get above $32,300 for Bitcoin in order to start seeing real movement to the upside. So I'm hoping we're going to see that soon. Moody's just came out with a report, sees risk that U.S. banking turmoil cannot be contained. Surprise, surprise. Despite quick action by regulators and policymakers, there's a rising risk that banking system stress will spill over into other sectors of the U.S. economy, unleashing greater financial and economic damage than we anticipated. And what I say to that is, wow, you should have just been listening to crypto Twitter, maybe watching some YouTube videos, and you probably would have known this months ago. Simply put, the risk is that officials will be unable to curtail the current turmoil without longer lasting and potentially severe repercussions within and beyond the banking sector. Moody's warning came after Treasury Secretary Janet Yellen indicated that the U.S. could take additional actions if needed to stabilize the banking system, and after Federal Reserve Chairman Jerome Powell assured Americans on Wednesday that the central bank would use its tools to protect depositors. So Moody is, taking a look at the banking sector in the United States saying, oh gee, this is not good. We're going to see more fallout before things get better. So, the logical question, and I think us in the crypto sphere, we know why government is doing this, but the logical question a normie might want to ask is, can't government leverage new technology, or rather DLT cryptocurrencies, in order to mitigate some of this? Mr. Whale here posting this. The SEC is warning all investors that proof of reserves means nothing and is hinting at enforcement action. So guys, this is their latest, okay? Proof of reserves means nothing. So we have exchanges and companies saying, well, look, we've got all this crypto, all these assets on our books. These are this is the proof that we have it here, and therefore we are solvent. But now the SEC is saying, that does not count. SEC is hinting at a Tether crackdown. So this could be the next one, guys. This could be a huge blow to the crypto market. We could see another big downfall for crypto if that does happen, but doesn't want to say it outright, as they know it would cause the entire industry to collapse. Tether will 100% go bust. This is the prediction here from Mr. Whale on Twitter. So here's what the SEC released. The risk of loss for individual investors who participate in transactions involving crypto assets, including crypto asset securities, remains significant. The only money you should put at risk with any speculative investment is money you can afford to lose entirely. From this report too, proof of reserves. These types of services may not provide any meaningful assurance that these entities hold adequate assets to back their customers' balances. Down here, he highlighted this point too, may not provide any level of assurance. So, stating flat out proof of reserves mean nothing according to them. With so-called proof of reserves, there are no specific audit requirements for the engagement of the information reported. Down here, it says investors should be aware that this level of management discretion undermines any suggestion that a proof of reserves offers protections similar to a financial statement audit. And then over here, highlighting this significant risk. Investors who deposit funds or crypto assets with a crypto asset security entity might cease to have legal ownership of those assets and might not be able to get those assets back when they want to. Sometimes highly concentrated and opaque ownership and control structures. So just kind of highlighting some of the key features to look out for. Enforcement of law and regulations by state, federal, or foreign governments that may restrict the use and exchange of crypto assets. So is Tether going to be the next to fall? Cyprus Demanding Core here posting this. So is anyone else wondering what's going to be the catalyst that gets rid of the majority of crypto assets, because whatever the mass purge event is going to be, it's got to be coming soon if we really want to truly see this market thrive. And so I agree with this theory. We currently have 23,000 cryptocurrencies, different cryptocurrencies in the space, but they cannot all continue to coexist. And so we're going to see a massive purge. There is no way this market survives long term with over 23,000 crypto projects listed. Sorry, that's just not realistic. This means something or someone has to wipe this crypto space clean. And so again, just going back to this idea that it could in fact be Tether, what happens generally is that investors will put their money into Tether USD as the market's going up. Let me bring up the total market cap here. And so, it's a safe haven. It's a way to secure your profits if you do have a Tether or any other type of stable coin. As the market rallies, what we generally tend to see is Tether USD and other stable coin market caps rise, because what happens is people take profits along the way. These market caps rise. They're now holding their crypto profits in these stable coins. But of course, if these stable coins go bust, what happens next? That is the big question that I think could be on a lot of our minds. Mr. Man here posting this: to amend the securities laws to exclude investment contract assets from the definition of a security. Tom Emmer put this forward in the House of Representatives. And here's what this bill states. Okay, be it enacted by the Senate and House of Representatives of the United States of America, this act may be cited as the Securities Clarity Act. And he states here, it is the sense of Congress that among the ways that participants in the digital asset industry have raised capital and earned revenue is through arrangements in which investors, where is it here? Okay, I guess it continues down there. Essentially, though, I'm going to give you guys the gist of it. They want their securities laws to exclude investment contract assets from the definition. Oh, I guess it's right up here, right at the beginning. To amend the securities laws to exclude investment contract assets from the definition of a security. So we know this, this definition is antiquated, and it is good for securities, but for cryptocurrencies, it just does not fit. So Tom Emmer putting forth this new bill, but we're fighting tooth and nail. From the Anthony Pompliano podcast, Caitlyn Long was recently interviewed, and here's her take on what the American government or what the banking industry is currently doing in the United States.
So here's the punchline. The systems have not been updated, and that scares the bank regulators. So what did they systematically do? They went out and proverbially shot the most tech-forward banks. Now, stop and think about that. People are voting with their feet to use better, faster, cheaper ways of moving money. And what did the bank regulators just do? Shut down some of the most tech-forward banks in the country who can move money better, faster, and cheaper. That should scare every American, because and you saw it in the White House. By the way, this has been all coordinated. The White House report that came out the day before was dunking on financial innovation and talking about how we should basically just stick with our banks, which are safe and sound. That was a hilarious observation, because of course we all know the banks are not safe and sound. It's now very clear that there is a solvency hole. By the way, there always has been. It's just that now everybody's realizing it. So the next point is that when the White House is out there saying, basically taking an anti-innovation stance, and you see what the bank regulators have done to shut down some of the most tech-forward banks, they want to retrograde technology back to the analog world.
So if that's not telling, I do not know what is. On the one hand, the crypto innovation is being stifled, and I get the feelings that you and I are manifesting because of this. We want a free marketplace where we can trade cryptocurrency and make profits. However, some are of the opinion, and just hear me out here, that the people over at the Fed, the banking sector, they're actually on our side in terms of trying to protect us against a greater global WEF agenda. And so, it all makes sense. Keep the banks in the dark, keep the banks on analog technology so that there's no excuse to move to the better technology. Now, I know because we're XRP hodlers, this isn't, this doesn't bode well for us, because we do want to see that American innovation. We do want to see technology thrive, and we do want America to be at the center of it for various different reasons. We do not want other countries around the world like Russia or China, good examples of this. We do not want them to have the power to be on that cutting edge of technology development. And so, again, a double-edged sword, a bit of a bittersweet song for us XRP hodlers, because on the one hand, do we really want to usher in the WEF's global agenda? I've talked about this on this channel. I'm very anti that. But on the other hand, hedging our bets, using XRP, leveraging XRP in this new financial system, this is what's going to get XRP price up, and this is what's going to make us profits down the road. So A very interesting thing to be looking at here. And I think essentially what Caitlyn Long is stating here is true. But I don't think that governments and banks in the US are going to be able to hold off technology innovation for long. I think that eventually it'll go that way. I think they're really trying to, make it so that the US remains powerful, which I get. And I want, but it's going to have to be done in a different way. The fact of the matter is, there are facts here, right? The banking sector is effed. The economy is effed by and large. And so what are we going to do? There has to be a solution. It is definitely going to include cryptocurrency adoption. I think there's a way to do this and a way not to do this, and I still think regulators, U.S. government, is trying to figure out what that is exactly and how they're going to be able to usher in this new financial system without too much collateral damage. And I think this is the tricky part at this point in time. Moving along, guys, I've got Michael Branch here posting this, okay? So we talked a little bit about Balaji Srinivasan and his 1 million BTC prediction by mid-June. Yeah, if you guys didn't catch that video, I will link it up here in the top right-hand corner. He's warning the U.S. government will cut off access to Bitcoin as this banking crisis deepens. So this is what he's predicting. He did a new interview in the Bankless podcast. He predicted that a lot of U.S. fiat banks will go to zero and that the U.S. government will try to stop people from exiting the financial system. Can enough people get to the Bitcoin exit in time before they close the exits? And guys, this is another good reason why you should keep your cryptocurrency safe on a Ledger Nano or something similar, but also have different exit possibilities. Sign up for a bunch of different exchanges because I don't know if for whatever reason one has decided to shut down or decided to limit your transactions, you do have another couple to rely on. It does not hurt to look at other exchanges that are overseas that might cater to customers in your country. So just to kind of, put that out there, he does predict that Bitcoin will be protected by enough governments around the world. So that's the thing, right? Bitcoin is not going to be banned. Even if it's banned in your country, there may be a way to exit using Bitcoin in another country. Last week, the former Coinbase CTO made waves in the crypto world after placing that bet, $1 million per Bitcoin in 90 days. He does think the US dollar is about to implode into a period of hyperinflation, similar to how we saw German marks implode in World War I. In 1923, the Weimar mark collapsed and witnessed its value plummet to 1/trillionth of a US dollar. And, we could be seeing something similar going on with the US dollar today. So the rise of Bitcoin, he's saying Bitcoin, I think all cryptocurrencies, especially the ones that have value. Well, really only the ones that have value. Those are the only ones I hold. And Bitcoin, so I do hold some Bitcoin too, even though technically there is no real use case for Bitcoin. It is the granddaddy cryptocurrency, and I do see it thriving despite that counterintuitive narrative. Only hold coins with value. Well, coins with value and Bitcoin. I'll put that disclaimer on there. Anyway, wanted to thank Michael Branch for posting that. We've also got this, guys, an update with the Ripple SEC case, perhaps giving us some more insight on a settlement date. James K. Filan posted this. The SEC has filed its response to the Ripple defendant's letter regarding the supplemental authority from the BITRUE and Voyager cases. That was the latest update. I did a video on that last week, so the updates are coming out fast and furiously. I will post that video up here. And so what can we glean from this? Well, Bill Morgan, notice this. Check out this last paragraph. The SEC refers to direct Ripple sales to public investors. Have not seen it put its case that way before. All Ripple sales since May 2020 are to ODL customers who are not investors because they immediately use it for transfers and not for an investment. So now this is what the SEC is saying. They're saying that those particular sales are not investment contracts, nor do they have any bearing on defendants' contention that they did not receive constitutionally sufficient notice that their direct XRP sales to public investors violated the federal securities laws. As detailed in the SEC's summary judgment briefs, before suing defendants, the SEC had provided replete official guidance that unregistered crypto offerings could violate Section 5 and be brought at least 35 enforcement actions charging such violations. The bankruptcy judge did not conduct a Howey test of any kind, did not analyze any Section 5 claim, and did not determine whether any fair notice defense could absolve any party from liability under the federal securities laws. Voyager offers no support for defendants' fair notice defense. So Bill Morgan pointing this out, that the SEC changing pace on this, and he's saying he's never seen them put it this way before. CNF with a cheeky response down here. It's worth noting that the SEC is a notoriously unreliable source when it comes to understanding the position of the SEC. And yes, I do agree with that statement. So, that is what they are stating now. We've got some more insight here from John Deaton. The more that I think about the SEC's war against crypto, including the recent Coinbase Wells notice, the more I'm convinced the end game is to try and allow the incumbents to get a major piece of the industry. So, as Caitlyn Long had mentioned in that clip, we're seeing the government say, okay, let's halt this new technology. We've got a thriving banking sector that works. If it ain't broke, don't fix it. And I mean, they got away with this mentality for years. But now, I mean, crypto is knocking at the door of every country in the world at this point, or mostly every country. So, I don't think that is going to stick anymore. John Deaton down here saying, I seriously doubt Coinbase was the only exchange. I assume Kraken, Binance US, and Binance and others have all received notices or will soon. The SEC doesn't have the resources to fight everyone. This is about crushing the market so incumbents can get in. I think it's a stalling game, says Oscar Arnarsson here, while trying to breathe life into the carcass, the US dollar, and preventing others from taking over. So yeah, I think it is a bit of a multifaceted plan they have here. Bill Morgan here saying, thanks, James. That ends the speculation about why the SEC had not replied to the letter from Ripple on the BITRUE case. So Bill was suggesting, and I know many of us were also thinking, that maybe we were going to hear of a settlement soon. He says, sorry guys, no settlement yet, but I don't think it is the end of it, guys, quite yet. Jeremy Hogan also posting this. The SEC finally replies to Ripple's supplemental authority. They must be busy with other things. Although it raises valid points regarding the BITRUE case, its attempt to argue that the Voyager judge did not say that the crypto space faces glaring uncertainty is smirkable. He goes on to say down here, I think these are two cases that are bad for the SEC, and this reply negates the BITRUE decision a little, but doesn't take away much bite from the Voyager judge's ruling, but it's all FND stuff. Nadir Ahmed down here saying, if you had to compare the filing with Ripple's filing and were the judge, which way would you be swayed? And Jeremy Hogan responds, that Voyager order is really good for Ripple. So guys, we are seeing perhaps still a positive outlook for the case. Madara down here saying settlement in March still in play. Overnight suggesting April. And SkyXBT saying, can we expect this case to end this month or no? No one wants to clarify this. Jeremy Hogan, though, clarifying, I think it absolutely ends on or before. Sorry, gotta go, so he had to run. So on or before this month, guys, still 7 days away to the end of the month. Today is March the 24th if you are watching this video on the day that it's dropping. Jeremy Hogan still projecting that we're going to see a Q1 2023 settlement. I mean, we haven't seen one yet, but anything can happen. We got 1 week to go. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.